Today, we're tackling a big one, commercial real estate. We're going to break down what it is, who the key players are, and, this is the best part, how you can actually own a piece of it.
You know what I'm talking about, right? Those huge office buildings, the bustling shopping centers, those massive apartment complexes. It's so easy to just look up and think, oh, that's owned by some giant corporation or some billionaire. But what if I told you that owning a piece of that skyline is way more doable than you think?
Okay, so let's jump right in. We're going to hit three key things today: the people, the properties, and the pathways to owning them. Simple as that.
So, first things first. Before we even talk about buildings, let's talk about your most important ally. You've got to know who's in your corner, fighting for your best interests.
Okay, this is so important to get right. It all comes down to one question. Are you a client or a customer? If you have representation, you're a client. That means your agent is your advocate. They're legally required to have your back. But if you don't have representation, you're just a customer. They can give you facts and figures, sure, but they can't give you advice. They can't negotiate for you. And trust me, that's a huge difference. Getting this right is basically your first line of defense.
And to make sure everyone's on the same page, the pros use this really simple system called the 5 Ds. They'll discuss the options with you, help you determine if you're a client or customer, document it all in writing, which is key, then they disclose that to everyone else in the deal, and finally they do the work based on that agreement. It's all about making things crystal clear so there are no nasty surprises down the road.
All right, so we've got the who covered. Now let's get into the what. What exactly is commercial real estate?
You know, the definition is actually super simple. At the end of the day, if a property is used, or even just intended to be used, to make money, well, that's commercial real estate. It's all about one thing: generating income. It's an asset designed to create cash flow.
But here's the thing. These properties are a totally different animal compared to, say, stocks. You can't just log into an app and click buy. I mean, every single property is unique. And land, they're not making any more of it, so it's got this built-in value. The deals themselves, they're slow, they're expensive, they can take months, and it's not a set-it-and-forget-it kind of investment. These buildings need constant, hands-on management to really make them work.
So when we talk about commercial real estate, it's not just one thing. It's really broken down into 5 major types. You've got your office space, your retail, like a shopping mall, industrial warehouses, the backbone of e-commerce. Then there's multifamily, which is just a fancy way of saying apartment buildings. And finally, special use stuff, like hotels or storage units. Each one is its own little world.
Okay, this brings us to the big one, the question you've probably been waiting for. How can you actually own it? Let's talk about how you get in the game, because there are more ways than you might think.
So, the most direct route is just buying it yourself. Individual ownership. It's simple, right? You own it, you get all the profits. But, and this is a big but, you also take on all the risk. We're talking personal liability here. If something goes south, your personal assets could be on the line.
Now, what if you're buying with other people? Well, you've got 2 main options. Think of joint tenancy like a last one standing deal. If one owner dies, their piece of the pie automatically goes to the other owners. You can't will it to your kids. Tenancy in common is the opposite. Your share is your share. You can sell it, you can transfer it, you can leave it to your heirs. It's all about how you want to handle things down the line, especially for estate planning.
As the deals get bigger, the ownership structures get a bit more formal. You've got partnerships and joint ventures, which are awesome for teaming up and pooling money. The downside? They can still leave you personally liable for debts. Then there's the corporation. This is like building a fortress around your personal assets. It creates a separate legal entity. The catch? You might run into what's called double taxation. The corporation pays taxes on its profits, and then you pay taxes again on the dividends you get. So, it's a trade-off.
But hang on, because this is where everything changes. This isn't just for the big players anymore. Thanks to technology and some really cool new financial tools, the doors have been blown wide open for regular, everyday investors. Seriously, this is a game changer. Let's start with something called a REIT. That's R-E-I-T for Real Estate Investment Trust. The absolute easiest way to get your head around this is to think of it like a mutual fund. But instead of buying a basket of different stocks, you're buying a piece of a huge portfolio of properties.
And REITs have some amazing benefits. For one, they're liquid. You can buy and sell them on the stock market just like any other share. Super easy. 2, you get instant diversification. You're not putting all your eggs in one building. You're spread out over tons of properties. And 3, they are income-generating machines. By law, they have to pay out at least 90% of their taxable income as dividends. That means you can get a regular check from real estate without ever having to fix a leaky toilet.
Okay, next up is something called a MIC, or Mortgage Investment Corporation. Now, this one's really cool because it completely flips the script. Instead of owning the building, you're investing on the other side of the deal, the lending side. You're essentially becoming the bank, pooling your money with others to fund the mortgages on these properties.
So the whole point of a MIC is to collect mortgage payments and then pass that interest income directly to you, the investor. In fact, they have to pay out 100% of their net income every year. It's a way to get into the lending game, which can sometimes offer even higher returns, especially when you're lending to folks who might not fit the super strict criteria of a big bank.
And that brings us to the latest and maybe most revolutionary development, real estate crowdfunding. This is where technology has just smashed the old barriers. You've got these online platforms where tons of people can all chip in a little bit of money to fund one specific project. It's the power of the crowd brought to real estate.
And how accessible is it? Well, how about this? Some of these platforms let you get started with as little as $1. Yeah, $1. That massive barrier to entry that used to exist, it's pretty much gone.
So what's the appeal? Well, first, just about anyone can do it now, because you don't need a huge pile of cash. Second, you can spread your money around, putting a little bit into a bunch of different projects to diversify your risk. And maybe best of all, it's totally passive. You invest, and the pros handle everything else. No calls about broken elevators.
So as we start to pull all this together, I want you to remember one thing. We all get excited about the what, the cool building, the great location. But the how you actually structure your ownership, that's just as important, if not more so. It literally dictates your risk, your profit, and your control over the whole thing.
So there you have it. The people, the properties, and the pathways. From owning an entire skyscraper to investing with a single dollar from your phone, the world of commercial real estate has never been more accessible. So the only real question left is, where do you fit in?